Hey traders, welcome to our Monday. Yes, the market is closed edition of Charts and Coffee. If you're anything like me, you know that there's always something we can be looking at on the charts and preparing for the week. Although, of course, a shortened week at that, but always something we can do. And so, yeah, on a holiday, I'll usually spend the first couple hours in the morning taking a look at the charts before I go enjoy the rest of this 3-day weekend. So I figure why not do that here with you all. All right. So as always, we want to, every time you begin the week, and someone asked me, I think in the options room last week, if I would share the notes as I did the week before. And I thought, yeah, why not? It's a basic look at, well, here, let me see if I have it up. It's just a basic template that I start to just fill out every morning. What are the bullish sectors? What are the bearish sectors? What are the sectors without any kind of directional bias? Right now, what are the inflation plays, currency plays, energy plays? What are the sector rankings? Where are we in terms of the weak and strong sectors? And then I'll take a look at, what kind of hot zones, economic data releases that we need to be aware of for the week. So that last point brings me to something that I hope everyone here in Charts and Coffee is doing each and every day, which is, are you going ahead and making sure that the stocks that you are tracking are not, on top of earnings? So for example, take a look at, this is Estimize. I like Estimize a lot in terms of being able to track those particular names that I am interested in. Home Depot, Booking, Lowe's, Baba, Etsy, AZO. I mean, we still have quite a few individual, relatively important stocks. Now, not necessarily important in the way that they're going to be broader index movers. Nike could move the XLY, FedEx could move the IYT, Costco could be a player within the sectors that they're weighted in. But, other than Home Depot, we're really past those individual stocks that can rock a broader sector. And then before you know it, we're right back to counting down to April. So we're on the tail end of the meaningful, the high impact, heavily weighted stocks within earnings season. And then, every single day, and clearly at the beginning of every week, I'm going to take a look at the week in its entirety. What are we dealing with in terms of data? What type of data is affecting the market today, even though the US markets are closed on bank holiday? Going forward into the rest of the week, you don't want to just look at what's coming up today or what's coming up, immediately. You want to look at what's coming up for the week and what has already happened while, for example, the US markets were closed. So taking a quick scroll through the week, it's actually a pretty quiet week, except for we do have little fairy dustings of different FOMC members. Got Meester on Thursday. Going to want to keep an eye on that one. And I think the biggest thing this week, the biggest hot zone to keep an eye on, is the Federal Reserve's pet inflation number, that PCE. Very different weighting, very different calculation than the CPI. And that's what's coming up in terms of this week in high impact, high heat, hot zones. So on Friday, 8:30 a.m., that's going to be an interesting number. We're going to want to see the way in which those FOMC columns of expectation for March, May, June play out. Now, we've had a significant shift once again. There was so much talk, maybe sort of peak rate hike chatter, but was so much talk about whether or not we get that half point hike. And then there were some sort of informal comments being made last week that say, no, that's really not the direction the FOMC is going to go in. And you can see how that quarter point column, take a look here, that quarter point column, that is what's discounted. That half point column has fallen down. Remember, these were two columns that were neck and neck. Sometimes one would gain on the other, but these were neck and neck throughout last week. So this is pretty significant, where now it's that quarter point that we're expecting. And then that's going to then start to give us more insight into, another quarter and May, another quarter in June, etc. So, this is generally speaking got to be pretty good for traders who are looking at the hawkishness, but not that half point bump hawkishness. And remember, the shock to the market only comes. The shock to the market only comes when a market does not know something's coming. How do you know it's coming? It's this stuff. All right. So as always, gang, that's a quick kind of jaunt through the market there. So as always, this show is about your questions. Let's take a look at what we've got coming up. First up, good morning, Julian. In your portfolio allocation, what are your max and minimum percentage positions per asset or per trade? I really don't have anything that fixed in terms of my. I know you say portfolio. I take portfolio, Julian, as my longer term time horizon. Really, my investments. My book of trades, I have particular allocations. My portfolios, not as much. I mean, obviously, I don't want to get loaded on a particular name, but I don't have as much by way of constraints for allocation for my longer term book. All right, next up, James, position size on reversals. All right, if I take a 1, 2, 3 setup with CCI confirmation, how much, hang on here, how much of my budget would I go with half or, okay. So in other words, if I'm going to deploy capital according to my budget, which is what I teach in Sector Secrets. And if you haven't already penciled in March 9, we're going to talk about a lot of this stuff on March 9. So pencil that in. I don't have a link for you all yet, but just sort of pencil that in. We have our webinar coming up. It's right around the corner. So that budget concept. So James, if it's a 1, 2, 3 continuation, probably a little bit more than a 1, 2, 3 reversal, because then we're talking about a downtrend going neutral and then turning into an uptrend, which is not necessarily low probability, especially when we've, jumped all those hoops of the 1, 2, 3 pattern forming the neutral market environment, and then the CCI confirming that 20-period CCI confirming the whole setup. But as far as budget goes, I would probably look, you're a member of the mastery, so I can give you something a little bit more detailed. Look at the size of the 1, 2, 3. Look at the size of the distance between the 1 and 2, between the lower low and the swing high. Because remember, that distance, that chasm is your risk. So I'd look at the size of the pattern. If it's a nice tight pattern, risk is lower. If it's a wider pattern, risk is higher. So I'll think about that. All right. Next up is, do I have any Russia plays? I don't. I'm playing energy. I'm playing natty gas. So I guess that could be related to that, Julian. Jack asks, how can I find which ETF sector a stock is in? So there's a couple places, Jack. You want to look at the holdings. So I'm a big fan. Yeah, let me head on over here. So I'm a big fan of ETF DB. Just a quick warning. I've never seen ads. I love this site, but I'm going to be straight up. I've never seen ads like this site bombards you with. It will absolutely bog down your browser. It will bog down. I've actually went to ETFDB during a live broadcast and literally watched my resources get sucked into a black hole when I go to this site. It's but anyways, I pay for this site. I'm happy to pay for it. But I go to ETFDB. I warn you all, it's one of my favorite ETF research sites. And I just go here and I do a reverse search on the stock exposure tool. So that'll take care of it. All right. There we go. ETF stock exposure. So it's what I call that reverse search. So you should be all set with that. Now, I think Yahoo, you can search, and probably Zacks, and there's probably a number of places where you can get that information. But that's where I like to do my reverse search. If you ever see me bring up an ETF site when I'm in one of the rooms, that's the one I bring up. All right. So next up is Could I please talk about point of validity with a real world example? Sure. I've got a Nike trade on. Got a Nike trade on right now. We took this short last week. I think I put this through. We have the mastery, the options room. So this is a trend. It's a downtrend, right? So when I've got something like a downtrend here, Polly, I know that I'd like for, in this case, Nike. Now remember, point of validity, I wish it was just a template where we say, okay, this is the point of validity for all trades. It's actually, the point of validity is really understanding the reason that validity is such an important part of this Ragheeism is validity then acknowledges, well, what were the reasons you took the trade in the first place? And then what would unring that bell? So I love that we're below the 200 propulsion. I love that we've got the consistent red grab candles. I love the Darvis overhead. I love the swoop and the resistance of the wave, all within the context of a bearish momentum, bearish trend. So all those things are part of the validity for the trade, right? So Paulie, the next thing I do is ask myself, when would that no longer be the case? And for me, the point of validity here would be a green grab candle. I think one or two of those gets my attention. A close above the 34 EMA high, or definitely a close above the 200. So it's not as if there's always the same boxes to check. But if you know, and I think everyone here, if you've got a setup that you love, that you use frequently, you know what the boxes are to check before you go in. So which ones and how many have to be unchecked before you say, okay, that there's no longer validity for this trade. So that's an example from a trade just from last week, right? The same thing could be said bullishly with Coke, by the way. Same idea. You might say, well, Rog, we pierced. Yeah, it's true. Is that a point of validity to get you out? No red grab candle, still well above the 200. You see? So it's not just this one thing happens and the wheels fall off the wagon. So I want to show you another example where we did pierce the wave. Did that get me out? In fact, we were buying that day. We've got a long position in Coke. Holding Darvis, holding green grab, well above the 200. Stable yellow. We had a little bit of a yellow work in, but it's pretty stable green. So it's not as mechanical as I think some people would like or think. It's far more an issue of what are the reasons, not one. What are the reasons you got in and which one of those, how many have to no longer be valid for you to get out? So hope that helps. Facebook. As far as Facebook goes, Amos, are people over Facebook? I think that, look, it's easy to sit around and bash Zuck. But I think that when you look at what he's doing, he's a move fast, break things kind of guy, right? I wouldn't bet against Facebook longer term because, look, social media is not going anywhere. And can you imagine if Facebook monetized WhatsApp? There's a lot of things Facebook could do. I wouldn't bet against them. I just right now wouldn't buy it. It's broken most of the criteria for a trade for me to buy. So then, this is where time horizon is so important. And this is where I'm so pleased with as I see the evolution of not just the Sector Secrets Mastery Service. I don't want to just talk about my mastery. I want to talk about the people in it. What I love is that they are understanding different time horizons. They realize, Rog, when things went choppy, we day traded in the room. When the trends are starting to reemerge, we're starting to go back to our swings. And when we see moves like Facebook, are there opportunities to build positions in our longer term book? Meaning 6 month, 1 year time horizon, weekly time frames, etc. And I don't know that Facebook's met that criteria for me as of the moment. So for right now, are they over it? Yes. But it's when certain stocks fall out of favor, especially stocks like Facebook, where they are going absolutely nowhere. I mean, when I say they're going nowhere, I mean, they're here to stay. Yes, TikTok's having its moments and just like Snap had its, but let's not underestimate the foothold that Facebook has within financial media. So social media, I should say, within social media. And yeah, the financial world's going to sort of dump on them right now, but I'd keep this on the watch list. It's still dropping in price. I wouldn't call it on sale in terms of something I want at a good price yet. But Amos, yeah, it's on my radar. It's a longer term time horizon. Yeah, great question. Are they over it for now? I'm with you. Yeah, I think they're over it. Right now, they don't want anything to do with it. They really don't. So, or Meta, whatever the heck they call themselves now. And that's a big thing too, right? People have to change their view of what it is that Zucks and company are up to. In the JTMLT top row, hey there, Jim, is momentum, bottom is trend. Did I get that right? Yes. Yes. So if you're looking at the JT multi, top momentum, 813.21, bottom trend, 34. And then in the trade flags, you'll see they sync up with that. So top or first, Momo, bottom or second, trend. You got it. You got it. So you're mentioning QQQ? Sure. Bearish momentum, bearish trend. This is why we're short Qs. This is an alert I sent out in the options room. This is why we're short XLY. That's an alert I sent out in the mastery. This is why we're short Russell too. Right? Now look at Russell, kind of wobbling, but overall, when you look at where we are structurally, it's not bullish. Look at that sea of red grab candles. Yeah, we have a couple blue neutral sort of poking in there, but you look at that directional bias, it's definitely bearish. So thanks for the question. All right, moving on. We need to change the name of the channel to Caffeinated and Dominate. Oh, that's great. Caffeinate and Dominate. I do love that. I got that from Trish, my partner here in the office. For my birthday, got me a little stirrer. And on the stir, it says Caffeinate and Dominate. And I just loved it. I just loved it. I would like to know the difference between chart setup for day trading and swing trading options. Nothing. I know that sounds crazy. Wait a minute, Rog, your day trading layout is the same layout you use when you're swing trading? Mm-hmm. The main difference, so there's two layouts. How many of you are photographers? You remember what a triptych is? 3 photos like that. So I have this little triple layout here, right? A little triptych. The day trading, if I'm going to sort of split hairs here, 2-5 daily. When I start looking at my position trades or weeklies or longer term time horizons, 5 daily in the middle, weekly on the right edge. So yeah, I don't make that big a shift. No, not at all. What's the difference? Nothing. The difference is in us. Primogenitor, the difference is in me. The difference is in us. What am I looking at? I want to know where the daily is when I'm day trading. I want to know where the 2 and 5 are. 5 is the main decision-making time frame. When I am position trading, I want to know where the weekly is, and I'll keep an eye on the 5-minute because I want a little bit more of the insight into a little bit of some flow as I'm getting my fill. Yeah, I can't help it. Even if it's a longer term position, I do like to look at where the flow is and just kind of macro manage my entry a little bit. But the 5-minute for day trading and the daily for swing is my main time frame, and I bookend them with 2 time frames that I think complement my overall decision. So very little is different. You'll see me on a 2-5 daily, just like this. By the way, I share the layout for those of you that are logging in, and if you're in the options room, the futures room, the day trading room, our main rooms, and then in my sector secrets mastery, where we have a slightly hot rodded version of this layout for you all in there. But my tops layout, as it's known, the 2-5 daily with the indicators, the free version, the free tops indicators, it's in the room drive. So you all can kick the tires on that and see what you think. All right. So I hope that helps. And yeah, almost nothing, my friend. 2-5 daily is on my screen probably 80-90% of the time. All right. Do the red folder from the other countries weigh in on? Oh, okay. So in terms of hot zones, right. So that's where the terminology comes from, straight from Forex Factory, and the little icon. What time is it? Red hot zone, right? Only if I'm in the ETFs for those countries, right? Let's say I'm playing EWU, an MPC member, BOE event is going to catch my attention. Let's say I'm trading, the New Zealand dollar, for example, which I'm not in right now, but I do like it for a short. Well, we've got the RBNZ, the Reserve Bank of New Zealand, up on Tuesday evening. So it depends on where my exposure is, right? If I'm playing currencies, if I'm playing the ETFs of those countries, and whether or not those hot zones are going to add volatility and volume and movement, right? Opportunity potentially for those symbols. So it depends on the exposure. Depends on what I want to get into as well. Usually not though. Usually not that much, but it's good to know what's happening in case I do, right? Want to take advantage of it. All right, next up, can I talk about my option risk and trade management? I recall you risk up to 10%. No, 5, target 25%. No, I don't use a 25% target. Trader B, no, I don't. No, those numbers are, I don't ever recall that. But I know there's so many numbers. It can get very, very dizzying. But no, usually about 5. And then targets are based on support and resistance. I don't use percentage-based targets. I know other folks do, and maybe that's where some of I know there's so many messages, I get it, but no, that's not me, my friend, no. And I don't risk up to 10. It's very rare that I will deploy that much capital. So when you say risk, well, let's get some basic jargon down. Budget is how much of my account am I willing to spend, right? Risk is how much of that budget I'm willing to risk, right? Risk is of the budget. And then the larger sort of line in the sand is, if I'm wrong about a trade, am I going to lose more than 3 to 5% of my account, right? 3 to 5% is usually that account risk. And so 25% is really, that's the level that I'll consider the validity for a trade. So, in terms of budget, I don't mind, frankly, how much of the money in your account you all spend. We have in the mastery where we dive into this with a whole lot more detail, obviously. When we talk about budget, a lot of folks ask, Rog, I'm trading in a margin account. Number one, you don't have to. I trade in a cash account. And it's not unusual if I'm spending 80, 85% of the cash in there. I don't have any problem with that. In a margin account, I would not do that. But in a cash account, spend away. The difference is we're long calls, long puts. Our risk is whatever we paid for those options and commission. So if I'm deploying 60, 70, 80% of the cash in my cash account, I have to know how much of that am I willing to risk per trade. We even get as granular as risk per trigger within the trade. So it's not complicated. It's a few moving parts. I will not say that trade management is something, and I love the question, Trader B, because I'll tell you what, everybody wants to know, what are we going to trade? Few people ask, how do we manage risk? So I love the question. And yes, this is something that we emphasize a lot in the mastery. It's simple arithmetic. There is no holy grail to trading, but if there is a bit of a holy grail, it's position sizing and risk management. And I think the key to that for me throughout my career has been budget, right? And I think the key behind budget, and this is something, again, very different, not giving myself credit for anything, just saying it seems to be a very unusual attitude, which is, I don't know which trade is better or worse in my book. Can you imagine the delusion that we have to be putting ourselves within to say, well, this trade's very likely going to be the winner and this one's not? Why take the trade that's very not likely to be the winner? So when I see fixed betting size, and you might say, well, Rog, some options might be $4,500 and some might be $450. You spend the same? Yes. Because otherwise, what I'm saying to myself and then executing via the idea in the market with my money is, I think this one's going to work better than the other one. The truth of the matter is nobody knows, right? So varying bet size, I think, is really a tactical error. You never know. So I go in with that understanding of, I don't know which one of these trades is going to go crazy. I hope all of them do, but we don't. So probably the most important thing I teach is, don't vary your bet size under the delusion that this trade is so much better than the other one. We don't, at the end of the day, we really don't know. And if there's anything that I think is going to keep traders from blowing up their accounts, it's more of a fixed bet type approach to deploying capital into the market. That's especially as traders. Now, if you ask me as an investor, that's a different conversation, especially over a longer period, a longer time horizon. But as a trader, I'm very much a fan of a fixed bet. By the way, as you get better and better at trading, you might change that approach. But in the beginning, try it. I think it's going to make a significant move, a significant change or positive impact on your trades. Next up is, hello, Mr. Walker. Let's see. Do I set a minimum, maximum number of monthly trades? Do I set it? No, because again, I don't know what the markets are going to give me on any given day. I don't know what on any given week, on any given quarter. I do not know what type of opportunities are going to be presented to me at all, right? I just take what is given. That's it. I just take what is given. So I'm actually trying to pull up, here we are. So I gave this to, there we go. So all right. This represents the transactions. Now, don't let the number of transactions throw you, because it's not uncommon that I enter a single trade idea with 3, 4 different entries within a zone. So, you look at my number of positions. This has been since the end of, I think this is since, mid to the end of November. Close to the end of November. All right. So this is what I've been doing since then. So don't let the number of transactions throw you, because remember, I might have an aggro, moderate, conservative. I might enter the lower end of the conservative and the upper end of the conservative. I might have a couple different aggros. So I'll scale in. So the transactions. So when you say minimum number of monthly trades, so November, December, January, February, divide that 129 by basically 4-ish, right? 3, 4, and you get an idea of my activity. All right. Now, these are trades that are budgeted. So each one, and this is where it's so important. People always ask, how much is in your account? That's the wrong question to ask. The question to ask is, how much are you spending on each trade? Do you see? Hopefully I'm sort of changing the paradigm a little bit about what we think is important. These are all daily time frame entries, nothing intraday. So we're not doing the gymnastics of long calls, long puts. And then the idea also is, and one of these must have been in a margin account, because I can see I had one lonely little calendar in there. But you see how I'm majority long call, long puts? Well, when I tell you all, that's 80-90% of what I do. That's probably underestimating how much I rely on just long calls, long puts. The other thing that I would mention is, again, 100,000 your account. Who cares? 50,000. I'm not here to talk about you need a small account or big account or whatever. How much are you spending per trade? That's budget. That's the question everyone needs to ask. Not, oh my gosh, I've got $1 million account. Who cares? What are you spending per trade? And of that spend, the budget, how much are you risking? Those are the questions to ask, right? Does that make sense? So if you ask me, Rag, okay, 157,000, what was the budget, Rag? Tell us. Under $3,000 per trade. So I was buying approximately $3,000, sometimes less, sometimes fractionally more, but right around there per trade. That was the budget that I was willing to allocate per trade. And I think a lot of you have seen me do this in these sort of, I'll call this a medium-sized account, since we all want to sort of have some sort of definition of this. My husband trades a smaller account. He had a $7,000 account, which I'm going to brag on him for a minute. He grew that in around the same period of time to 23,000. And his budget is a little bit less than mine. He's spending less because he had less. And as his account grew, his budget increases. These are the things that I hope are needle moving for you all here in Charts and Coffee. I hope these are the things that resonate. That kind of understanding of it doesn't matter what's in your account. It's how much of your account are you risking? So anyways, I hope that makes sense. All right. Let me grab a few more questions here and we'll start to wrap up our holiday edition. Will I still be doing 2 to 3 week swing plays? Trader P, remember, I'm not ever going into a trade saying we're going to be in this for 2 or 3 weeks. I have no idea. We took a trade in Coke. This is an alert last week, hit our target. It took 4 days. Now, could we be in it for that long? Well, based on the option expiry, we could. And if the trend continues, we certainly could. But my only job is, did I buy the option in my zone and did I scale out at the first target? Just like we scale in, we scale out. So if we can keep going, then absolutely, we'll see. But I'm just playing entry to target. I'm not doing again, we're going to be in this trade for 4 days. Says who? I'm going to be in this trade for as long as theta decay doesn't erode the value of my option, as long as my point of validities are not met, stopping me out in either situation, or until the first target is hit. And I can move to a break-even stop. And now we can really see how high is high. So I'm always looking for trades that I can hold for as long as a trend lets me hold them and for as long as my expiration date lets me hang in there, right? If I put the quarter in the ride, I want to be able to, use as much as I can. But, I'm never, ever, ever going to base a trade on, well, we're going to be in this for this long. That's not ever been a priority. So I hope that makes sense. And that's a really fair question. I think a lot of traders still think in terms of time horizon for the trade. I want to know what my time horizon could be, but at the end of the day, it's still based, everything, the decisions are still rooted in do we hit our target or not, right? It's still price based. Do I use leaps? I do, yes. Would I short Facebook on a rip? I would have no problem with that. As far as somebody asked, do I risk all $3,000? Oh gosh, yeah, Stephen, I just saw that at the corner of my eye. No, never do I risk max debit. I don't even know where that is logical in the markets. There is very little chance that after you use a particular position loses 25 to 50% of its premium, depending on how you bought it and so forth. I am not a fan of advocating max debit. No, I never recommend it. The most we risk is, and those of you in the mastery know this, 50% of our premium paid. So never am I going to risk max debit. I don't hate my money that much. No, I just simply don't hate my money that much. All right. So, and I want to be straight up with you all. This is just my way, right? If someone else out there is risking max debit, that's their process and that's their way. And if they have positive results, who cares what I say? But the most transparent and honest thing I can share with you all is what I do. And again, on March 9, we're going to dive a little bit more into that little graph, those trades that I just showed you and what I've been doing and these tools that a lot of you have gone and downloaded from Countdown Trader. So definitely grab those tools from Countdown, or if you're a member, go into the room drive and grab the layout that the Lorna bot has been kind enough to explain and put a nice little PDF and a great toss shared item. Makes it easy. And then on March 9, we'll start to, stitch a lot of this together as we do here each and every day, also in Countdown. But the March 9 webinar, I want to give you all heads up, straight up. It's going to be about my mastery, and we're going to have a very cool mastery offer. So if you've been wondering, okay, Rag, I get an idea of what you're doing here in Charts and Coffee, and I've caught a ton of your free videos over the year. Yeah, what's it like to be in the room, day in and day out? We'll talk about that. That's what March 9 is going to be all about. How am I trading in this environment? Short term, longer term, even longer term time horizon. So we're really looking forward to that on March 9. All right, next up is as far as trading view goes, it's a little bit tougher to Yeah, I don't think we have a tutorial right now. We have one in the mastery because I use TradingView in the mastery quite a bit. This is TradingView, and oh, here we go. Not this. Well, that's Toss. And this is Toss. So those are the two primary platforms we use. All right. Okay, so would it be possible to have a cam from my husband? Oh my gosh, I have two of the most camera shy humans in my life. As much as I'm an extrovert, yeah, it's funny how I'm surrounded by people. No, Rob, mic and camera is all yours, all yours. So probably the day after never is my guess. Is my guess. I get that request from my husband. I get that request for Trish. And yeah, the day after never is when they're going to be on camera, which is hilarious because they're both very good looking people. They don't want to be in front of the camera. Anyway, so so yes, so I want to be straight up with you all. Trader Momo, yes, March 9, I'm going to talk about, it's not just about the sector secrets. I'm not just going to sit around talking about the mastery. I'm going to talk about what we're doing in the mastery, right? What have we done intraday? What have we done end of day? How are we managing with the tools that we have? Okay. So Lorna Bot rocks, Jim. Yes, absolutely. Yeah, absolutely. With a capital R. I agree. I agree. So March 9 is really how have I been handling this sort of tricky price action we've seen since easily October of last year to now? Because frankly, before then, things were in an uptrend. If everyone was to talk about how they did in an uptrend, that's great, but we don't have that now. So October, November, things shifted, and macroeconomic trends and monetary policy shifted. In this environment that we're in right now, the environment that we're dealing with right now, how have we been navigating it? And that is what March 9 is about. Okay, Rog, what do we do when things aren't going straight up and the Federal Reserve is not going to be, pumping money into the system? What do we do as they're going to reduce their asset purchases and they're going to unwind the balance sheet? And oh yeah, we'll probably see 3/4 of a point of rate hikes between now and July. So it's a different environment. And that's really what we're going to talk about. And that's frankly what we've been doing in the mastery. So gang, as always, kudos to all of you for tuning in on a Monday where the markets are closed. I don't want to take up too much of your morning. Go spend some time with family, friends, or just relaxing a bit. I do want to let everyone know, however, if you're a member, I'm going to get the notes out to you all. I'm doing my homework today, so I'll get the weekly notes. Someone asked me if I would share that, just my weekly watch list notes. So I'll send that out into the room. So heads up for that alert later on. Keep an eye on your Simpler Trading mobile app. It'll pop up. And by the way, the notes that I send out are very mobile app friendly. So you can do all the reading right on your app. If you're at your desktop, well, clearly that's easy peasy too. All right. As always, gang, have a great one. I will see you all on, tomorrow for our charts and coffee. And then this week, I'm going to be in the rooms quite a bit. I'm trying to remember what my schedule was. But if you're part of one of the memberships, I'm sure I'll see you all at some point this week in the room. So looking forward to the follow through of a lot of, I'm looking at my book right now, some financials, staples, energy, crude oil, natty gas. There's a lot of really good looking trends if you know where to look. All right, gang, be good to each other. Be good to each other. And I will see you soon.